What is going on, guys? So this is going to be a very different style video. Something I haven't really done anything like this before, but I have a feeling it's going to be pretty entertaining. I had a pretty good time making this. Quickly, if you do want some commission-free trades on Questrade or some free stocks on Wealthsimple, two platforms that I both personally use and stand behind, links to sign up will be in the description or pinned comment. Also, come join the Facebook group where we talk Canadian stocks and a bunch of other nonsense. Link to join that will also be in the description and pinned comment. But without any further ado, let's get into it. So I had a comment on that Lion Electric stock video that I did a few days ago. If you guys haven't seen that, definitely go check it out. Lion Electric is a electric bus company. Apparently they want to one day make electric trucks as well. They're Canadian, so a lot of people were really kind of interested in them. And I went through the stock and it was absolutely horrible fundamentals. I did a valuation. I think it's trading at around $10 now. I had it worth about $2 with really aggressive assumptions. So most people said, damn, you really opened my eyes up to this. You showed me something that I didn't really consider before. But I got a couple comments telling me I didn't know what the hell I was doing. Calling me a fraud. Calling me, you'll see. It's actually pretty entertaining. But the funniest part was he got really insulting, and I found it absolutely hilarious. So you might think, JP, this is childish of you. You're beefing with somebody in the comments. Like, dude, man, in real life, look, I'm an athlete. I played university level lacrosse. If somebody says something to me, somebody insults me, I'm going to smack you in the mouth. That's who I am. I love to be politically correct JP on the internet, but every now and then you're going to get the real JP. You're going to get little dazzles of him. So I'm going to take you through what this person said. Somebody actually backed him, and I want to address both these points because I feel like there's a lesson to be learned here. Somebody once said there's a lesson in every bar. So I really feel like I can address all these points and really teach a lot of people or reiterate to a lot of people some really good factual points that you should know and you should stay with and keep these with you throughout your investing journey to help you to avoid making mistakes and investing in garbage companies. Maybe not even garbage companies, just garbage stocks. You have to completely separate the stock of a company from the actual business. Take Amazon back in the tech bubble days. And every time you say that, all like the Gen Z kids they roll their eyes, they go, oh, this boomer. Man, I'm 25, bro, I know boomer. But the funniest part is that that's one of the best examples in history. Jeff Bezos even said in an interview, once that tech bubble actually burst and Amazon stock crashed 96%, Jeff Bezos was asked in an interview about what was happening in the stock. And he said straight up, the stock doesn't represent the business. I'm probably misquoting him, but he said something along the lines of, the stock doesn't represent the business at all. Amazon's business is doing better than ever. That stock price is way overvalued. And Amazon performed at the highest level and still continues to do so, but the stock didn't reflect it. The stock had way more priced in and it was ridiculously overvalued in a giant bubble. That's exactly what I think the electric vehicle industry is in right now. Some of these companies, most of them will go bankrupt. Do not get me wrong, most of these companies will not be here. Lion Electric, in particular, may be here. Things may work out. It still doesn't mean, if everything works out for this company, you can still earn a terrible return on this stock because you paid way too much for it when it was in a bubble. Like, I have no doubt in my mind that more likely than not, the S&P 500 will outperform this stock over the next 10 years. There is a chance that this thing pops off, and if that's the case, then I'm going to be looking like an idiot, and a lot of people they can have their laugh, because for every time this does work out, there's 100 times where it doesn't work out, and you're sent packing down to the docks, selling your butt to a bunch of sailors trying to make back the money you lost. Shout out strong, man. But so let's get into it. I hope you guys kind of enjoy this. You don't find this too childish. I hope you guys find this entertaining, because I sure did make it. So the Epic Hamster decides to comment, this video is downright painful. I can't believe I wasted 10 minutes of my life. One, it was a 20-minute video, so he didn't even watch the whole video. So maybe he skipped out all the important stuff I mentioned. I can't believe I wasted 10 minutes of my life on this nonsense. What's Tesla's profit margin? Try 30%. What? Because every company's Tesla, right? Every electric vehicle company is Tesla. That aside, I don't know if you know, Hamster, bro, but Tesla makes luxury vehicles, right? The Model 3, the cheapest car they have, in Canadian dollars sells for about $55,000. That's kind of out of the average Canadian's price range for a car. You know, the Model S goes for well over $100K. Obviously, margins are ridiculously high on these cars because they sell like luxury cars. You want to know what Lamborghini's profit margins are? Probably a lot higher than 30% because they sell the cars for $250,000 a pop. So you can't compare all these EVs and their margins to Tesla. Like obviously Tesla's going to have higher margins than Toyota because Toyota sells their average car price probably in the 20,000s. Whereas Tesla's average selling price right now, in Canadian dollars I'm saying, it's probably 70K. LEV has no legacy costs to deal with like Ford and GM. You're right, they got a lot more costs to deal with and a lot less positive free cash flows. Furthermore, school buses are only one aspect of their business. You totally ignored the trucking business. Right, because how many electric trucks are they making? Oh wait, how many electric trucks has this company made so far? And two, for the people that really think electric trucks are going to be a thing in the next 3-5 years because Elon Musk promised they would be, you know how many times Elon Musk has promised that the Cybertruck was going to come out? He's been saying the Cybertruck was going to come out since 2019. 3 years later, here we are. You're going to go, ooh, supply shortages. Supply shortages weren't a thing in 2019. He's a grifter. Elon Musk is kind of I love the guy, but he's kind of a grifter. He hypes up his fans. He pulls out dumb little things like, the Tesla robot. Oh my God, it's a dancing robot. Oh my God. And these morons pump the stock. They go, oh my God. I've watched people do legit videos with a straight face going, well, now when you factor in Tesla's robot potential, the robot market potential for Tesla's not making robots. They're not going to make robots. It was a little gig to get publicity for their little media event. Anyways, this isn't a rant on Tesla. Let's get back to the topic here. Why no mention of the new plant in Illinois? New battery plant. The capacity to produce 20K buses in a year is meaningless. I don't know where he's... Just because you have a factory doesn't mean you're going to produce and sell 20,000 buses profitably. This company has negative gross margins right now. We'll just see what happens, but let's get through the rest of it. You have a lot more homework to do on this company. Let's see who's right over the next couple of years. First, you guys wanted me to do the homework so bad, I did it. Let's see who's right over the next couple of years. I don't mean to break it to you, buddy, but history's on my side. 99 times out of 100, this does not work out. I'm sorry to break it to you. I hope it does. I don't want you to go... Actually, I want you to go broke. I'm just playing. I don't want anybody to lose money on this stock. That's why I don't want you to buy this stock. I really, at the end of the day, I hope it works out for you guys, but let's move on. So I replied, maybe a little aggravating. I don't know. You guys tell me if I deserved the escalated response this guy gave me. So I go, best of luck to you, buddy. If you can feel good about the fundamentals, I have nothing to say. And then I go, also, of course, I ignored the trucking aspect. Electric trucks are 15 to 20 years away. Maybe they're not. They might be 10 to 15 years away. But, dude, there is no infrastructure to support an electric truck market. There's nothing there. We don't have the technology just isn't here yet. It's not. This isn't coming in 3 years or 5 years. Probably not even 10 years. It's going to be longer than that. We simply don't have the technology yet, nor the infrastructure to sustain this. I don't know if a lot of these EV bulls, have you guys drove a Tesla? I can barely get to my cottage on a full charge. In fact, I can't. My cottage is about a 3.5 hour drive. I have to stop. I can barely get a 3.5 hour drive, 4 hour drive out of the way without stopping for a charge, let alone in the winter. You factor in a transport truck that at times will go miles and miles and miles without seeing a city, through northern Ontario, through Manitoba, through Saskatchewan, through, if you go down to the States, through Colorado, the Rockies. You realize these trucks go to these places, right? And they don't see cities for hours. A truck is significantly heavier than a little Model 3. You know that, right? It's going to require, the technology isn't there, the infrastructure isn't there, and it won't be there for a long time. So let's move on past that point. So then he goes, laugh my off. Sure it is. Look, hamster bro, if you believe electric trucks are 3 to 5 years away, just please go all in on the stock. Do it. He probably already is. You're going to be down to the docks real quick, buddy. It is obvious that you spent more time making this video doing your due diligence on this company. To which I replied, that's probably what warranted his next reaction. But then I correct myself and I kind of take it back to earth and I be a lot more respectful and I go, no, in all seriousness, the truth is, why not just wait until a company like this becomes profitable? Things could work out for this company, but your return might not necessarily reflect it because you bought the shares when they were massively overvalued and the company was massively unprofitable. Similar to what I said at the beginning of the video. There could still be a lot of money to be made on this company once they've already become profitable. If you're investing in this company, please understand the risks and keep it to a small, very small, speculative position in your portfolio. You can always buy more after they become profitable. I can't say that enough. You did not have to buy Apple at IPO to make money off of it. You could have bought Apple any point within the next 10, 15 years and still done incredible on the stock once they were already profitable. You buy businesses that are profitable, trading at fair prices, your returns are maximized, and your risk is substantially decreased. You don't have to speculate on pre-profit, maybe even pre-revenue stocks. This one doesn't even have positive gross margins yet. It's not even making money on producing and selling its buses. Then I go on to say, I literally needed to do zero due diligence on a stock after I see that they have negative gross margins, are massively unprofitable, are diluting shareholders massively, and after all that are still overvalued. Why would I waste my time doing due diligence? There's 10,000 other stocks out there in the stock market for me to buy. My job is to have a process to quickly screen the good ones from the bad ones. And that's so true. There's 10,000 stocks out there. If it takes me 2-3 days to fully dissect a company, read its 10K, its annual report, read the management discussion and analysis, listen to the conference call, that might take me 2 to 3 days, especially when I'm working full time during the day. If I want to dedicate my whole weekend to it, great, I've blown a weekend. Why would I do that? For 10,000 stocks, it's going to take me years to do. You have to have a process, right? You can't just hop in to an interesting idea, do a ton of research, and then look at the fundamentals and go, oh, it's losing money. They're diluting the hell out of shareholders, and they might go bankrupt. Why would I do my research before seeing that when I can see that and go, oh, all right, this probably isn't one I want to invest in? That's the point I'm trying to preach here. And a lot of people in these comments, in this little thread here that I'm about to show you, they're missing that I'm teaching a process to you guys, my viewers. And other channels are doing the same thing. I'm teaching a process to screen stocks before you waste your time researching, based on criteria that's proven to be successful over the long term. But anyways, let's move on. So then he comes back, he goes, your quote-unquote job is terrible. This is what killed me. Your quote-unquote job is terrible financial advice based on little research. He called me telling you not to buy a massively unprofitable stock that's diluting the hell out of shareholders and that's ridiculously overvalued and has negative gross margins to tell you to avoid a stock with all those boxes checked. He called that terrible financial advice. You can't write this. You can't write this in a book. I was dying. I'm crying laughing. You'll be lucky if this video makes you $20. Probably big money in your world. And then so Pavel Money, I think he has a channel. So hey, go check him out. Go show him some love. He at least came fairly respectful, unlike like Hamster there. So Pavel Money decides to come in and agree with Hamster, but he does so respectfully. So I don't want to shit all over Pavel. But he goes, fundamentals, questioning what I said. The factory will be ready this year. And you have analyzed the fundamentals? LOL. Look, that's me slapping my face. A factory being ready is not fundamentals. Fundamentals are what I talked about. Fundamentals are revenue growth, are profit margins, are return on investment, ROE, ROA, things like that. That is fundamentals. I've analyzed the fundamentals? Could overlook the factory? That's not a fundamental. So Pavel continues, he goes, do you really think there's anyone that invests in a startup because of their current financial results? Really? Pavel, did you watch my whole video? Did you watch my discounted cash flow analysis that I did at the end? Did you watch me project LEV's earnings out 10 years into the future and it tell you that it was a $2 stock? Did you watch that part? Because that wasn't me analyzing their current financial results. That was me projecting their future financial results quite aggressively. So Pavel continues, he goes, I know one thing for sure. You haven't read the investor presentation. You haven't read the Q3 2021 report. No f***ing shit, buddy. I'm sorry. Pavel, don't hate me, buddy, but look, I'm a hothead, man. If this is a party, I'd be screaming. If we're at a party right now and you guys are talking to me like this, I'm screaming, bro. But look, why would I waste my time reading the investor presentation and the Q3 2021 report when I know they have negative gross margins, terrible revenue growth compared to what their valuation is? They're massively diluting shareholders. They're losing money hand over fist. Why would I read their investor presentation and their Q3 2021 report after seeing all that? It would be very good analysis for a large cap company, but it isn't. It doesn't matter whether a company is a large cap, a small cap, a mid cap, a micro cap, a giga cap, I don't know. It doesn't matter. Every investment is the present value of future cash flows. projecting future cash flows for a business and then discounting those future cash flows back to the present at your desired rate of return. It doesn't matter what kind of business this company is. It doesn't matter what they're making. At the end of the day, when you buy a stock, all that you're buying are the future cash flows of a business. That's it. Cash flows. Cash. You're paying for future money that you'll be receiving from a business. It doesn't matter where that money comes from. It doesn't matter. Okay, I understand that you don't care about the company. No hard feelings. And look, I've been aggressive, like I said. No hard feelings to you too, Pavel. But if you don't know anything about the company, then why are you making a video about it? Like I said, Pavel, like I said in that video, I'm teaching a process of how to screen stocks. And I'm using this company as an example. I'm sorry I made an example of the stock that you're investing a ton of your money in, but that's the way it is, man. And he goes, there's 10,000 other companies that aren't starting now, but have been operating for a few years, and you can now analyze their fundamentals. That's the point. There's 10,000 companies out there, Pavel. How are you going to just quickly eliminate the good ones from the bad ones? Eliminate the bad ones from the good ones. How are you going to quickly do that for all 10,000? Are you going to read their Q3 2021 reports and their investor presentations, Pavel? You going to do that for 10,000? You're disappointed? I'm sorry, I'm disappointed too. So a hamster comes in and goes, all valid points. This guy's a fraud. So, I mean, was exactly my reaction when I read hamster's little response. So then I respond, having a factory ready isn't a fundamental, like I just said. You guys are really missing the point. This is about having a process to eliminate basically exactly what I just told you guys. I hope this plays out for you. Invest what you're willing to lose, but please be responsible with speculation. But apparently that's bad financial advice, according to Hamster. I then go on to say, if you'd like to present me with your model and your assumptions, I'd be happy to analyze them on the channel. Then I go, problem is, and this is a fact, problem is, Hamster, I know you're insecure about your investment because you chose to attack me for criticizing it. Like if you said Discovery, Baba, or TAP, or dog investments, I wouldn't care at all. I'd be like, okay. And that's the truest thing. With all these like hype stocks, Bitcoin, Tesla, Tattooed Chef have the biggest little communities that are just hyper defensive. If you say one thing, if you say you don't like the stock, you think it's too expensive for you, these people will attack you. They'll attack you just for criticizing, saying, I'm not buying the stock. These people are like hamsters attacking me, call me a fraud, call me saying I'm giving terrible financial advice for explaining to you guys a quick criteria to look at a company and go, this isn't one I'd ever want to buy. But hey, whatever. So then Pavel Money goes, so I'm wrong. And you've read their investor presentation and the third quarter report before you made the video? Pavel, I'm not going to do that, bro. He goes, you're really missing a point. A startup company needs to be analyzed differently. No, it doesn't. Any stock needs to be analyzed as the present value of its future cash flows. It doesn't matter what phase this company's in. If anything, you're right. It does need to be analyzed slightly differently. You have to discount the cash flows at a much higher rate because they're way further off in the future. So you have to pay much less, Pavel, for a startup company than an established business. Because an established business has cash flows now, and cash flows today are worth much more due to inflation than cash flows in 10, 15 years. So why would this company deserve a $2.5 billion market cap? He goes, which went public in order to raise money for its future investments, as you're entering into a future investment, not a current company. Yeah, it went public to raise money from a bunch of suckers that buy the stock. That's why they're diluting the hell out of shareholders. If you guys still want to buy it after they're diluting the hell out of you, and they're going to keep doing so, then, I mean, that's kind of a fool's decision. Of course, it's riskier than investing in existing fundamentals, but the point is you analyze a REIT differently than a technology company. I guess, because a REIT's a completely different business, that's real estate, and there's different regulations with paying out distributions, but it doesn't matter if it's a technology company. It doesn't matter if it's a school bus company. It still presents cash flows that you have to discount to the present. That's what an investment is. It doesn't matter what it's coming from. I hope you can make better content. Oh no, he says, I hope I could help you make better content. Right, Pavel, come on the channel, man. Let's make some good content, buddy. So I'm sorry, it's been a quite long-winded rant already, but if you guys aren't enjoying this, they want me to go into the fundamentals. You got it, guys. You got it. I'm going to dive into the Q3 financial highlights, the quarter of this company. I'm going to talk about what management said. We're going to do our due diligence, baby. We're going to do our deep dive. You guys ready? Oh, this is going to be fun. So their Q3 2021 financial highlights, which Pavel really wanted me to go check out. These are taken. These are the highlights. I'm looking at the highlights. I'm looking at only the good. Keep that in mind. This is going to be hilarious. So they open up with delivery of 40 vehicles. 40 vehicles. an increase of 30 vehicles. Oh my God, they 4X'd vehicles. They 4X vehicles in 1 year. They used to be doing 10, now they're doing 40. I'm sorry. Okay, next they go on to say revenue of 11 million, 12 million. This is a $2.5 billion market cap company. Maybe it's around 2. Every website I look up has a different market cap. It's between 2.5 and 1.5 billion. In a quarter, they did 12 million. You tell me how that warrants a $2 billion valuation. Next, they go in to talk about their gross profit margin of negative 1.2 million, down 0.7 million. So, I mean, their gross margins, which is the money they make from selling their vehicles minus the cost it takes to make these vehicles, is negative. They're not even making money on their buses right now. Keep that in mind. Will this change as the business scales up? Likely, but keep that in mind. Administrative expenses of $10 million, which include $4.5 million of non-cash share-based compensation expense, aka share dilution. So you're getting diluted. But oh my God, their expenses are 10 billion. Oh, that's so low. It's decreasing. Yeah, they're diluting the hell out of you with half of that. They're actually splitting up their dilution. So then they go selling expenses of 5.2 million, which include $1.5 million of non-cash share-based compensation expense. So more dilution. Then net earnings. Earnings, oh my God, the profit. You gotta do your due diligence of $1.23 million. Oh my God, they're profitable. Look, they turned a loss into a profit. Nope. Net earnings for Q3 2021 includes a $138 million gain related to non-cash decrease in the fair value of share warrant obligations. They're losing a ton of money, guys. This isn't a recurring thing. This company lost a ton of money this quarter. Adjusted EBITDA, here you go, the adjusted EBITDA of negative 8.8 million as compared to negative 2.8 million in Q3 2020. So losses quadrupled. Acquisition of intangible assets. So when you calculate a company's book value, it's a great way to value an unprofitable company like this, because basically what book value is if you bought the company outright and it was trading at a book value of 1 and you just decided, look, this company isn't worth anything, I'm going to sell everything they own. I'm going to liquidate the company. If they had a book value of 1 and you sold everything, you'd make your money back completely. So if you're factoring in their assets for their book value, the only things you can really sell are their physical property, plant, and equipment, and things of that nature. Their receivables, their cash. Well, obviously, you just keep the cash, you wouldn't sell that. But intangible assets aren't tangible. They're things like patents. They're things, in this case, they are R&D activities. So I know this because I'm an accountant. You can capitalize development costs if they meet certain criteria under IFRS. So basically, the cost they have to develop probably a patent that is exclusive to this company, probably wouldn't provide anyone else with much value, is now capitalized as an intangible asset. So if you're buying this company upright, like I talked about, using that book value, and you try and sell everything, you can't sell these intangible assets. They're more than likely worthless to anybody else. So you have to factor intangibles and goodwill out of your book value calculation. You have to calculate the tangible book value as a true measure of book value of an unprofitable company. Lion had basically $320 million in cash. So they have a ton of cash. Great. They're going to need it. They're losing money hand over fist. You just saw they lost $8 million this quarter. So they have $3 million in cash. They have $320 million in cash and access to a credit facility of another 100 million. So they can get some credit. Everyone points out to support by the Canadian federal and provincial governments of up to approximately 100 million. So the federal government and the Quebec government are splitting funding for this company. So everyone looks at this and goes, oh my God, the Canadian government and the Quebec government have faith in them. One, the Quebec government also gave a ton of money to Bombardier, a company that went bankrupt a few times. So it really shows the Quebec government's history of investing in great, solid companies. But that's it for the financial highlights. If you guys, everything I presented here was a negative. These are the highlights, and everything other than, I guess, this cash was a negative. Guys, I don't like... You want me to go further into the business? Let's go into the actual business. Let's do our due diligence that everyone talks about. That word has just become so watered down these days. It's almost terrible. But let's go do our due diligence that Pavel and Hamster really wanted me to do. Let's look into their business updates. What's really going on with the business? What's going to change? So they have more than 450 vehicles on the road. 450, guys. That's it. How many school buses are in North America? They got 450 of them. And then people act like there's going to be no competition. They go, look, the school bus market, even the truck market, whatever, it's all going to be huge, even though they're not in trucks for Lord knows 10, 15 years. everyone loves to go, look, they're going to capitalize, they're going to grow so much faster. Like, they're the only company that's trying to make electric school buses right now. If I just happen to go on Google and type in electric school bus company USA to see the American ones, we got 2 right here, right off the bat. We got Bluebird, we got electric IC bus. They're not the only company doing this. It's not just a straight line escalator to the top. So this is my favorite part, because this is what they're going to point to. They're going to say vehicle book order of 2,000 all-electric medium and heavy-duty urban vehicles as of November 10th, 2021, consisting of 261 trucks and 1,763 buses. Wow. Look at that increase. Like, that's crazy. You guys are right. Oh my God. This company, I gotta buy the stock. Representing a combined total order value of approximately 500 million. So that sounds great, guys. That sounds incredible. But if it looks too good to be true, it probably is. Here's the catch. I hope you guys did this in your due diligence. I hope you guys saw this when you did your little due diligence. This includes 1,000 school buses related to a conditional purchase order from Student Transportation of Canada. So conditional. So more than half of the buses, more than half of them are on a conditional purchase order. Let's see what it's conditional on. For which a funding application has been submitted under Infrastructure Canada's Zero Emission Transit Fund program. So 1,000 of these 1,700 buses is conditional on an application being approved. Guys, that sounds like some hot speculative trash. If this isn't approved, there's a good chance they just say, sorry guys, budget's tight. Government can't afford to, pay for all your little buses. Keep in mind, more than half of these buses aren't even confirmed. They're based on a conditional purchase order for a funding application that hasn't even been approved yet. So that's far from a sure bet. Then Lion Energy book order of 187 charging stations and related services. Whoa, look at that. But represents a total order value of approximately $2.5 million. $2.5 million. This is a $2 billion company. That's not moving the needle. Then approximately 90% completion of their 900 square foot factory. So this is the factory the guy was talking about. And that's great. Look, they're building a factory. Excellent. They can scale up. I'll tell you a little story that I've been through. Throughout my summers in university, while I was working as a student, I would go work my summers in a factory. Oh, JP works in a factory. Yeah, I made 15 grand a summer, and I went on vacations every year because of it. So shut up. A hamster's gonna go, it was a great job. Look, I worked in a factory. I've seen a state-of-the-art hot dog. I worked in a hot dog factory. But anyways, I've seen a state-of-the-art factory. Everything revolutionary, all the equipment there. The factory was losing money. There were so many inefficiencies. Just because you build a factory doesn't mean it's going to be incredibly profitable. Things can go wrong. Like I said, this factory I worked at that was state-of-the-art was actually net losing money. So keep that in mind. They also, again, construction advancing as planned. So that's super ambiguous. Construction advancing as planned for their Battery Innovation Center. Okay, cool. As of November 10th, 2021, Lion had 950 employees. Great, the unemployment rate's about to go up a little bit more. So this is another key thing that I want to show you guys here. And this is a very subtle little thing. It says see non-IFRS measures for these book orders that they were talking about earlier. So IFRS is International Financial Reporting Standards. So basically what non-IFRS measures, what IFRS does is it presents a uniform kind of reporting standard metric that everyone has to go by. There's full transparency in financial statements and everyone knows how you're reporting certain numbers. What non-IFRS measures are accounting tricks to make numbers look better. So keep that in mind. And then, so I'm going to close this video off just by going over this last little part here. And I think this is really important for you to see. So this is regarding the 2 little orders that they have. The conversion of the company's order book into actual deliveries and sales might also be impacted by changes in government subsidies and economic incentives. So keep that in mind. If we get a conservative government in a couple of years, do you think these subsidies are staying for this company? Then they go on to say, for example, the announced conditional purchase order from the Student Transportation of Canada for 1,000 all-electric Lion C school buses, which would represent the company's single largest purchase order to date, is dependent upon the satisfactory grant of non-repayable contributions to SCC under Infrastructure Canada's Zero Emission. So basically, this whole order, like we talked about earlier, is dependent on this grant coming through. So what a grant is, it's a loan that you basically don't have to ever pay back. It's free money. This is entirely dependent on this student transportation thing getting this grant. which isn't even a guarantee with the liberal government. Imagine if in a couple years we get a conservative government and they go, guys, we need you to pay us back that money. We're turning that grant, we're turning it into just a loan. We're going to need that money back over the next 5 years. What's going to happen, guys? And they go on to say, as a result, this company's realization of its order book could be affected by variables beyond its control and may not entirely be realized. There is the due diligence for you guys. You wanted me to do my due diligence? I just did it, and I hate this company even more than I ever did. If you guys, look, let's get real for a second. If you guys really believe in Lion Electric, and you think, JP, look, I respect all you said. That's great financial advice. But I want to speculate with a little bit of money. I'm putting $500. I'm putting, any money I can afford to lose. And I know I'm taking a gamble on this company, but I believe that electric school buses are the future. Look, it kind of does make sense. School buses for sure. Trucks, not quite there yet. But school buses, I can see it. You don't have to drive for that ridiculous amount of time. You go, you pick up the kids, you take them to school, you take the bus right back to the charging station. I can see it. But if you guys say, look, I understand the risks. I want to take a chance on this company with a little bit of very small speculative position. That's totally fine. Just do not go all in on this stock, or you're going to be down at the docks with a hamster over here. So I hope you guys learned something from this. If not, you're a little entertained. This is probably going to be a pretty long video. I feel like I've been talking for about an hour. But I hope you guys got at least some entertainment out of it and hopefully learned something as well. If there's anything I want to preach, if you're going to speculate, do so with a very small portion of your portfolio that you don't mind losing 100% of. And the other thing I want to preach is have a process. Use a screening process to look over fundamentals and go, is this a company I'd want to invest in? I hope I'm at least providing you guys with some of the tools that you need to do that. I'm going to be doing a video going over my my discounted cash flow model. I'll basically give it to you guys and I'll tell you how to work it, how to build your own. So I'm providing you guys with the tools to do your own numbers, do your own screening. So I hope you guys can at least appreciate that. And I hope some of you guys made it this far in the video and maybe enjoyed this rant a little bit. I hope this wasn't too childish for some of you guys. Anyways, appreciate it again, as always, and take care, guys.